One of the questions that I get all the time when talking to people early on in their franchise investment process is, how do I pay for a franchise? So assuming that most people don't have hundreds of thousands of dollars just laying in their bank account, this is such a valid question. Hello, my name is Joe Souza, and I'm a partner at Friendship Consultants, where we help individuals look for, vet, and invest into purpose-driven franchises. Today, we're going to talk about how can someone pay for a franchise, assuming that there are a lot of options. Self-funding. This is likely the easiest way to invest into a franchise because you got the money. So you have it in a savings account, or you have a brokerage account that is highly liquid that you can just cash out and invest into this franchise. So this is really good because it can streamline the process quite a bit. Your odds of approval with that franchisor are also better because you can prove that you are financially capable of doing the investment even without having to go for a loan. Another huge pro is that you won't have any monthly payments on a loan. If you were to go with a financing option, you would have to make monthly payment. So this is very unlikely in my career. It's not a whole lot of people that have that kind of cash to invest into a franchise, but those who do have it, it's a huge plus. SBA loans are likely the number one source of people starting a franchise. They are federally funded, so for the lender's perspective, they have a lot of guarantee that the government can cover for some of the losses, and it's just a overall great option. In my career, I would say about 80 to 90% of all the franchises that I sold in the past 18 years, they were funded by an SBA loan. So the pros are they have a down payment that is considered low, in anywhere between 10 and 30% is expected. The term are usually around 10 years, and interest rates are whatever the market can bear. At that point, we are in March of 2026, so I've heard that interest rates are hovering around 9 or 10% at this point. These are great options for people that don't have the full amount to invest and want to apply for a loan. Downside of it is that they usually require a great or a really good credit score, and also the paperwork and the process can be very lengthy, usually around 60 to 120 days. So the ROBS program, it's a very interesting program. We at Friendship have a number of affiliates that are experts in this program. What it is really you using your retirement funds or your retirement plans to fund your business. So let's say you spend a lot of time or a lot of years working in corporate America, you invested into your retirement accounts, and now you are at a point in time where you want to transition out of corporate America and invest in your own business, and you opt to go with a franchise. You don't necessarily have to go through a SBA loan process. You can just entertain the idea of using your own retirement funds through the ROBS program. I have had the pleasure to work with many franchisees that use this option, and they see it as a great option because it's a lot less expensive than, let's say, a usual loan. But once again, you have to have these funds already available in order to partake and actually have the benefit of using this program. And other common options that we see out there is tapping into your home equity. So let's say you have a house that you have purchased a long time ago and you happen to have a lot of equity. You can always tap into the equity to fund your business. Partnerships are also very usual. So you would bring in someone that doesn't necessarily want to be operating the business, but that person can be a silent partner or just an investor in your business. So their share will be really on the investment side. So that way you can come in and have some capital injection, but really contribute more with your time and your efforts, where that partner will bring in and serve as a investor into that business. And the other option is some franchisors that offer in-house financing. Now, this is not very common, but I know a few franchisors out there that have in-house financing, so they can help you get qualified and help you acquire a loan without even having to go outside of that franchisor. They do it everything in-house. Now, keep in mind that you don't have to use only one of these options. I know a lot of franchisees that actually use a combination of 2 or 3 of these options. As an example, someone that would use the ROBS program alongside with a SBA program, or they would use a partnership along with some of their own funds. So you can always see what makes the most sense with your current financial situation. And at Friendship, that's really what we do. We will guide you through the process, not only at looking, searching, and vetting a good franchise option for you, but also what makes the most sense for you financially. We have multiple affiliates in each of these programs that can guide you through the process with a lot of knowledge and a lot of expertise. So this is it for today. Thank you so much for your time, and I hope to see you next time.